Hello and welcome to the Kingsview Investment Strategies mid-quarter investment update. I am Scott Martin, Chief Investment Officer of Kingsview Asset Management. Joined today, hello again, Paul Nolte, Senior Vice President and Portfolio Manager at Kingsview Asset Management, and also one of my partners on the investment committee. Joining you today to talk about recent market events, of which there's been some, as well as kind of fill you in as an update, I guess, on the strategies, the portfolio allocations at Kingsview Investment Strategies, and talk to you about some of the things that we think are important that are going on in the markets and economy of late, especially in the last few days, given what's been going on. So, Paul, speaking of the last few days, it's good to see that we're both still standing. I think your jacket may have been taken off at some point during the last few days, which would be understandable. I lost the tie yesterday, so that's that. With respect to the last couple days in the markets, say going back to maybe Thursday, Friday, and certainly Monday, and today we're recording this on Tuesday, actually February 5th, what is the reality in the sense of what kind of happened versus maybe what was expected to happen or what some of the financial networks have said is happening? Kind of cut through some of the mustard, if you will, on what's been going on out there, if you please.
As much as we want to talk about this being, this year being a similar instance to 1987, coming into the year, we've had a very good last year. There were some rumors running around that the Fed's going to be raising rates, the dollar is getting a little bit weaker. It's a prelude to a 1987 type of an event. And we can argue and discuss the employment report on Friday being very good. Wage growth picked up a little more than people were expecting. So all of a sudden now investors are contemplating 4 rate hikes as opposed to 3, and the market started to sell off. And similar to what we saw in 1987 with the portfolio insurance, we now have derivative products that are very available and play the market and play the volatility of the market. And once we got that volatility to pick up, it was kind of a self-fulfilling prophecy on the way down as volatility picked up, and it exacerbated the move. So we now have some very violent moves in the volatility index. We saw a couple of those products disappear yesterday and today. So I think really that's more what's behind it. It's not an economic event. It's a market event. And 87 was similar to that. It was a market event.
Same thing.
Right.
Things got stressed and the rubber band gets pulled and snap it goes. And that's an interesting, I guess, approach or just rundown that you gave there, because that's really what I feel is important in these times, is focusing on true fundamentals, true process as we have at Kingsview Investment Strategies. And while I do understand that those last few days were super painful, I mean, we were watching them tick by tick, and frankly, it wasn't tick by tick, it was 50 points by 50 points. I mean, there wasn't really a lot of general market operation at that point. But when it comes to looking outside the box, looking maybe more as you should to those fundamentals, how do those fundamentals still look, given that we have had a market reaction to what all of a sudden is a really good economy? Isn't that kind of bizarre?
Well, and what's interesting is I'll prelude that too by when you look at the market internals, the advanced decline line volumes, et cetera, there was no forewarning. So a lot of people are going to look and say, you should have known. Well, we knew that the market was going to get more volatile. We figured we were going to get a correction eventually. We talked about it the last time we met. So we knew this was coming. The timing of it we had no idea on. So there was no prelude in the market that indicated this was going to happen now. But that being said, the market internals are still good. The earnings are still good for a lot of the companies that we look at and we use. The economy is still doing well. So again, going back to my point, it's more of a market event than it is an economic event. The economy is still doing fine. Earnings for corporations are still doing well. So I think it's maybe not today is the best day to invest, but you want to have your shopping list together and you want to leg into the market with any extra cash you have. As we move some money out of the market late last year, may not be a bad idea to move some money back in.
And how about Monday? Yeah, moving money back in on Monday, Kingsview Investment Strategies, and some of the portfolios, we did make some allocation changes relative to the fact that we are starting to see interest rates bubble up a little bit, which we've talked a lot about in your Nolte's notes that have come out, as well as on the video last month. We also have rotated a bit around in the sectors because we see job growth, we see output growth with respect to GDP and the profit share of GDP in some of the sectors that we've already owned increasing. So we like to see that. Again, very good news, not things to be necessarily scared about from a fundamental basis. And that's really, I think, the key takeaway here, Paul. And everybody, all of us are guilty of maybe reading too many websites websites or watching too much CNBC or Fox or Bloomberg from the standpoint of you do get information overload. And frankly, if you read enough stuff, if you watch enough television, you can find that mantra or you can find that story that's going to make you feel bad. I mean, it's just going to happen. So speak to me as we finish up here just about how going forward, having this system in place as we do at Kingsview Investment Strategies or for your portfolios themselves, how that can kind of save you or work in your favor when, let's face it, we could have another market like this as things calm down in a couple weeks, but fundamentals may just still rain out.
Oh, absolutely. And this will probably follow what we've seen in prior market declines like this. It's like dropping a tennis ball off the table. You're going to have a momentum bottom. You're going to get a bounce, and that may be what we're experiencing now. And then the markets will kind of roll over. You get some investors like, oh my gosh, thank God we got a bounce. Time for me to sell. I don't want any more of this. Markets roll back down again. And then you start to build a base, and from there, over the next few months, you start moving higher and maybe all-time highs again. So it's a process. It's not anything that we're trying to time. As long as the fundamentals look good, as long as the economy looks good, we should see higher stock prices. When we start to see that deterioration and falling apart of both earnings and the economy, that's the time where we could see serious market deterioration in the 15-20% plus category. This is more like the market breathing. The market has held its breath for a year and a half. We finally got some exhale, if you will.
And all of a sudden people didn't like it, and it's hard.
It's absolutely painful, but we'll see more of these 3 to 5% declines as we go through time more often, I think, now than we have.
Which would almost be a return to normal. So
yeah, absolutely,
that's a good thought. So thank you very much for watching this video and joining us for the Kingsview Investment Strategies mid-quarter update. Paul, thank you for joining me. If you want to get in touch with us, by the way, best way to reach us is an email that we have for all my group on the investment committee, including myself and Paul. That is ic@kingsviewam.com. We thank you for joining us.